there are some unexploded bombs. One unexploded bomb is really the bomb that brought down, as an example, First Republic and Silicon Valley Bank, which is to say that they gorged on long-dated fixed-rate obligations, which they funded in short-term deposits. When the interest rate went up, the net present value of those obligations went down at the same time that the yield relative to their cost of capital collapsed. So you have institutions as large as the Bank of America that have really pretty ugly unfunded holes.
You're watching Silver News Daily. Subscribe for more.
All right, picture this. Silver prices are trading low right now, but some experts are quietly whispering about a potential surge that could break records. And here's where it gets even more intriguing. Rick Rule, a legendary investor known for his insights on precious metals, says there are key catalysts brewing that could send silver soaring to heights we haven't seen before. Sounds far-fetched. Well, stay with me, because today we're diving into why this silver surge might be closer than anyone realizes and how these factors could impact your next investment decision. So, are you ready to see what could change the game for silver?
Get us a lot of hate, Dunnigan, which will show we did a good job. H.L. Mencken, I think it was, described elections as advanced auctions of stolen property, irrespective of the party in power. I've been on Earth for 71 years, and I have yet to experience a presidential administration that reduced government spending. Reagan reduced the growth of government spending, but he didn't reduce government spending. Another wonderful quote that I'd love your viewers to remember is this: politics, the activity, is understood by examining the root words. Poly, of course, from the Greek for many, but tick is from the English colloquial for small, blood-sucking insects. If you think about the political process as being many small blood-sucking insects, each trying to suck the lifeblood out of the other, you understand the nature of politics. I've received a lot of inbound email, and don't think of this as an anti-Trump rant. I don't like either candidate. But a whole bunch of people say, well, the problem that you describe is past tense, because Trump is going to bring on Elon Musk and Ron Paul, and they're going to reduce the size of government by 80%. I remember the same discussion around Reagan. For people who believe that fiction, I would ask them to buy a book called The Triumph of Politics by Dave Stockman. He ran the Office of Management and Budget in the in the Reagan administration. And he talks about the fact that the planned reduction in the size of government that was the promise in the first Reagan term lasted through 90 days of politics. So, as I say, I would ask people to read the book, The Triumph of Politics by Stockman. I'm not suggesting to you that Ms. Harris is a better candidate than Mr. Trump. I'm suggesting to you that if you hold out hope that Trump will reduce the size of government, and if you are using that as an excuse not to be concerned personally about $135 trillion of collective obligations, that you're making a mistake. Rely on yourself, not on Harris, not on Trump.
Right now, silver prices are holding around the $1.30 mark, but they're struggling under the weight of a few powerful forces. First up, the U.S. dollar is flexing its muscles, pushing to highs we haven't seen in months. And when the dollar is strong, silver, which is priced in dollars, tends to feel the squeeze. A stronger dollar makes silver more expensive for international buyers, cooling off some of the demand and keeping prices lower than they might otherwise be. But that's not all. Treasury yields are on the rise, adding another layer of pressure. Investors are favoring riskier assets and flocking to bonds, drawn by the promise of higher returns, which leaves silver and other safe havens out in the cold. This combination has kept silver prices in check recently, But it's exactly this kind of setup that has experts like Rick Rule suggesting we're approaching a pivotal moment. He believes that once these pressures ease, silver could be primed for a breakout. So here's the question. With these forces at play, are we actually on the edge of a silver surge waiting to happen? And if so, how soon might we see this shift? Stick around, because we're just getting started on why some believe silver's next move could surprise everyone.
I own it because I'm afraid it's going to go to 9,000 or 10,000 or some higher number. I don't know what a sevenfold increase from $2,700. I don't know what that number is. And I'm not saying it's going to go there, but I'm not saying it's not either. Again, it seems to me the only way out of our fiscal and political impasse is to reduce the net present value of the promises that we've made to each other. The time-honored way to do that is inflation. The IRS, not some cranky old libertarian, suggested in the decade of the 70s the U.S. dollar lost 75% of its purchasing power. If that were to occur in the next 10 years, it's anybody's guess where the gold price might go. People also need to understand I might be wrong. You don't want to have a larger investment in precious metals than corresponds with your financial and psychological ability to take risk. A little bit goes a long way, but get that little bit. Get that little bit. Do you realize, Dunnigan, as a society, I'm talking about the United States right now. In the United States, precious metals and precious metals-related assets comprise 0.5% of total savings and investment assets nationwide. That paltry number is down from a 4-decade mean of 2%. If we're looking at a circumstance where it is more likely than not that you inflate away the net present value of $135 trillion in obligations, it's not unreasonable to assume that the dollar will lose 75% of its purchasing power, like it did in the decade of the 1970s. I'll leave it to anybody's guess.
Now, let's talk about a major wild card that could completely shake up the silver market. U.S. fiscal policy under recent leadership. With tariffs, tax reforms, and other policy changes on the table, there's a strong possibility that inflation could see a substantial uptick. And here's the thing. Inflation typically drives up the value of precious metals, with silver often in the spotlight as a reliable hedge. Think about it. If inflation really takes off, the Federal Reserve might have to reconsider their current approach, delaying any planned rate cuts to counter rising prices. That means silver, known for its role as a safe haven asset, could become even more attractive, especially as the cost of living climbs and people seek protection for their wealth. And let's not forget the global dimension. With the potential for new tariffs, especially on imports from key manufacturing centers like China, the entire industrial metals market could feel the ripple effects. Silver, widely used in manufacturing, would be one of the first to respond. So we're left wondering, could these shifts in policy be the very spark that lights the fuse for a silver price surge? And how might this impact silver's role not just as an investment, but as an industrial metal?
Was when the price action didn't justify the narrative in the short term, people's faith vanished. And there were wholesale liquidations of gold. The people who did liquidate, the people who didn't have the financial or psychological wherewithal to stay the trade, missed a move in the gold price from $100 an ounce to $850 an ounce. The point is that your holdings of precious metals or precious metals equities need to reflect A, your needs, but B, your psychological and financial stamina. If you are overinvested in the space, you are likely to get shaken out. The second thing that people need to understand in terms of position sizing around precious metals is that if you own them for insurance, a little bit goes a long way. If you look back to the decade of the 70s, forget about $35 an ounce to $850 an ounce. Let's assume that the move from $35 an ounce to $100 an ounce was recovery of ground that was lost during the period where the gold price was controlled. So let's just say at the beginning of the period that the free market price of gold should have been 100, and it went to 850. That's an eightfold move in the gold price. Fast forward to the decade 2000 to 2010. The gold price moved from $253 an ounce to $1,750. What's that, a sevenfold gain? I'm not suggesting that gold is going to move sevenfold or eightfold in the next 10 years. All I'm suggesting is that gold historically has had really substantial upside, much better upside than people who don't read history have any sense of. You know, when people today are excited about the fact that gold's 2,700, and I've said this on your show, I don't own gold because I think it might go from 2,700 to 3,000.
Now, let's zoom out and look at the bigger picture, particularly at China's economic strategy and its massive influence on silver demand. China, the world's leading manufacturing hub, has recently rolled out a huge 10 trillion yuan stimulus package aimed at boosting its economy. But here's the catch. Many investors expected direct measures to jumpstart manufacturing and industrial activity, but instead the plan fell short of those expectations. This has left markets wondering whether industrial demand for silver might slow, at least temporarily. However, there's another side to this story. Silver isn't just any metal. It's essential in technology, especially in solar panels, which China produces at scale. With the global shift toward green energy and solar technology, silver's industrial demand in China alone could see a serious uptick. If Chinese-owned solar manufacturers decide to ramp up production to meet global climate targets, silver could become more valuable than ever. So here's the real question. If China pulls the trigger on massive solar investments, could we see silver demand and prices soar as a result? And how might this push silver into a whole new era, balancing between an industrial powerhouse and a precious metal investment?
Dunnigan, there isn't a one-size-fits-all answer, unfortunately. A person who has been prudent in his or her life and bought 2 or 3 or 4 pieces of modestly leveraged rental real estate has an inflation hedge. If their rents are sufficient to service the mortgage, and if their rents are fair in the context of the market that they operate in, inflation will raise the price of the construction of competing assets at the same time that competitors' cost of capital will go up. So people who have structured inflation hedges into their life, their own business where they have some pricing power, some moderately leveraged but high quality real estate, need to own less, as an example, physical precious metals. I will say, too, that too many people who buy our narrative overinvest in precious metals. They invest so much of their net worth in precious metals that they can't stand the periodic price declines that occur in precious metals. I remember very well in the decade of the 70s, in the period, I'm guessing 1970 to 1974, early 1975, the gold price had advanced from an admittedly price-controlled $35 an ounce up to $200 an ounce. And of course, all the gold bugs were geniuses, you know. Then the Fed raised the interest rate, and the gold price fell by half. The gold price fell from $200 to $100. It was a 9-month wipeout. And all those brave gold bugs, not all, but most, or at least many, turned tail and ran. What happened was...
All right, let's dive into the technical side of things, a side that often holds clues about where silver might be headed next. Right now, the Relative Strength Index, or RSI, shows that silver is in an oversold condition, sitting at a low of 36. For those of you who might be new to technical indicators, an RSI this low can suggest that silver has been pushed down so far that it's primed for a potential rebound. Adding to this, we've got another key level to watch, the 50-day exponential moving average, MA, which currently sits around $31.39. Silver has been struggling to break through this level, but technical analysts point out that if it does, it could signal a shift in momentum, one that might just fuel a rally. And let's not forget, silver prices are hovering near a significant support zone at $30.37, a level that's been tested multiple times in recent days. So the big question, with silver showing signs of being oversold and approaching these key resistance and support levels, could we be looking at the beginning of a silver recovery? And if so, how strong could this upward momentum become?
Be clear, Donegan, we're going to get through this, just like we got through the decade of the 70s. I remember very well at the beginning of the decade of the 70s talking to my grandfather about the uncertain future that I faced. I remember, as an example, looking for colleges to attend in California and basically having to wear a gas mask in 69 or 70. You know, social turmoil, racial turmoil, the economic turmoil that I've described. And I remember my grandfather saying, you know, son, my generation faced some problems too. We had World War I, and then we had the Great Depression, and then we had World War II. Don't go in the corner, crawl up, and assume the fetal position. Understand you got some challenges. Understand the person to deal with those challenges is you, and work your ass through it. And I think it's important that people not use the outlook as an excuse to fail, as an excuse not to work. Yes, if you have a defined benefit pension plan, it is very likely that the benefits that you receive, while you will receive the nominal sum that you were promised, maybe not, but more likely than not, yes, will buy you substantially less. And if your retirement planning assumes that the nominal value of the benefit that you're receiving buys you the same basket of goods and services that you enjoy today, you need to alter your plans. You need to save more. You need to spend less. You need to understand that if you are going on a fixed income, assuming that the nominal value and the real value of your income will be the same 10 years from now, unfortunately, you're in for a real shock. And I think that your listeners need to consider that. It would be lovely if I were wrong, Dunnigan. And assuming I'm wrong, what happened? Somebody had more savings. They had less stress. Being wrong would be a wonderful thing. I don't think I am, of course. I think I'm right. And as I say, don't use this as an excuse to panic. Don't use this as an excuse to fail. Use this as an excuse to plan and think through your future, your family's future, your kids and your grandchildren's future. That's what this call to action is about. I'm not trying to generate, a whole bunch of clickbait headlines. I'm just asking people to consider the arithmetic probability that as a society, we can honor our debts without inflating away their net present value. I would suspect that the odds of that are nil, zero.
Now, let's turn our attention to something crucial that often flies under the radar: supply constraints in the silver market. Unlike fiat currencies that can be printed at will, silver's supply is finite and largely reliant on mining production. And here's where things get interesting. Silver is often a byproduct of mining other metals, like copper and zinc, which means that the supply isn't as responsive to shifts in demand as we might expect. Currently, the demand for silver in industrial applications is climbing, especially with the growing push for green technology, yet the supply isn't catching up fast enough. On top of that, rising extraction costs are making it increasingly challenging for mines to boost output. This tight supply situation sets the stage for a potential squeeze, where even a modest increase in demand could send prices soaring. So here's a thought to consider. If we're heading toward a supply crunch, could silver become even more valuable as a result? And if that happens, how much higher might prices go as investors and industries compete for a limited supply?
They come to realize that it's unfunded. Social Security will become a real transfer program, not an insurance program, which is to say that the index might go away. They installed it so they can uninstall it. Certainly, I suspect that they will means test it, which is to say, if you are somebody who has achieved and earned in society, your reward for having paid into Social Security for a very long time is that you won't get it. In addition to that, likely, they're going to have to change the age requirement. When Social Security was instituted, it provided basically poverty-level existence beginning at age 65, and the average life expectancy of an American male was 66 years. Now you can begin claiming it at age 62, unless you suffered a disability, in which case it's earlier, and the average life expectancy, as I understand it, of an American male is 83 years. That's a very, very different actuarial assumption. In addition to that, of course, our population is aging. So when you talk about the fact that your listener base is concerned about the state of the economy, to the extent that your listener base hasn't made adequate provision for themselves and is in fact counting on Medicare, Medicaid, Social Security, a plethora of projects that indeed they paid for 40 years, please understand that their payments weren't sufficient, first of all. Second of all, that the money was taken. It's already been spent. And third, that while they will get the nominal benefit that they have been promised,
with inflation fears gripping markets worldwide, it's time to talk about silver's role as a tried and true hedge. When inflation rises, the purchasing power of traditional currencies weakens, and that's where precious metals like silver come into play. Historically, silver has acted as a safe haven, helping investors protect their wealth when fiat currencies lose value. As central banks inject liquidity to stimulate economies, inflation often follows, and we're seeing those signs already. Unlike stocks or bonds, which can fluctuate based on economic cycles, silver has a unique advantage. It holds intrinsic value and isn't tied to any single country's economy. And with its dual role as both an industrial and precious metal, silver offers a rare mix of stability and growth potential. For anyone looking to hedge against inflation, silver becomes an attractive choice. So here's the question. With inflation looming large, could silver become one of the best assets to shield your wealth? And in a world where purchasing power is at risk, might silver's allure as a safe haven investment make it even more valuable?
almost $2 trillion a year. So in terms of your listeners who are afraid for themselves, yes, be afraid for yourself. But be more afraid, I think, for your children and your grandchildren. Then again, your generation, and more mine, because I'm a bit older than you, voted ourselves all these cool benefits, but we forgot to pay for them. The bill likely comes due in crashing form when I'm senile or dead. But the bill will come true. In terms of the current generation, what they need to fear is that politically the way out of our debt crisis, in particular the net present value of entitlements, will be to honor them in a nominal sense, but not in a real sense. According to the IRS, in the decade of the 1970s, through inflation, the U.S. dollar in 10 years lost 75% of its purchasing power. If you believe, as I do, that the way that we handle the unfunded net present value of entitlements will be to inflate them away, what I think is that some old geezer named Rick Rule, who has been promised some amount of Social Security, I don't know what it is, $4,000 a month, something like that, I'll still get my $4,000 a month, but it'll buy what $300 or $400 a month does now. If you look back at the decade of the 70s, I would suggest that that's what you're going to see in the 10 years that come ahead. Now, people will point out right away, but Rick, Social Security is indexed to inflation. First of all, it's indexed to the CPI, which isn't an accurate measure of inflation. And secondly, as
Now, let's talk about strategy. Specifically, Rick Rule's strategy when it comes to navigating the silver market in times like these. Rick Rule, a seasoned investor in precious metals, believes that understanding the cycles and external pressures on silver is essential for making smart investment moves. His approach isn't about rushing in when prices spike or following the crowd. Instead, it's about recognizing when silver is undervalued relative to its potential and the macroeconomic trends at play. According to Rule, right now might be one of those moments, with inflation concerns, limited supply, and rising industrial demand. He suggests that silver could be nearing a pivotal inflection point. He emphasizes that for investors seeking both growth and security, silver's unique position as an industrial and safe haven asset makes it a strategic choice, especially in uncertain economic climates. Rule's approach is grounded in waiting for these market conditions to align, and he sees many of those alignments happening now. So if Rick Rule sees this as a time to closely watch the silver market, could this be the signal that it's time to consider silver as a serious part of your portfolio? And what might his strategy reveal about the long-term potential of silver in today's economy?
I would ask them to extend their fears beyond themselves, the primary fear, and be afraid too for their children and their grandchildren. When I look, and I'm not going to describe the entirety of government, that would take longer than we have. But when I look simply at the debt and deficits, when I look at almost $36 trillion in on-balance sheet obligations against a $6 trillion Fed balance sheet, or more importantly, I think, when I look at the net present value of unfunded entitlements and off-balance sheet liabilities, which exceeds $100 trillion, I'm struck over the fact that in farmers' parlance, as a society, we've eaten our seed corn. I saw an interesting statistic the other day, published by the IRS, where they estimated that the net private wealth in the public's hands, not in the government hands, in the United States, was about $140 trillion. That's an interesting number, because the on-balance sheet obligations of the U.S. government exceed $35 trillion, and the off-balance sheet obligations, net present value, exceeds $100 trillion, which is to say that we are in debt for almost the entire net worth, private net worth in the United States. I realize those obligations come due over time, and I realize that there is cash flow with which the government proposes to service that debt. I would only suggest to people who find solace in that on a current account basis, rather than servicing the $35 trillion in on-balance sheet obligations, we're adding to it to the extent of...
Here's where it all comes together. We've looked at inflation, supply constraints, rising demand, and the technical indicators all aligning around silver. Each factor alone might not cause a seismic shift, but together, they're building a powerful case for silver to reach new heights. Rick Rule and other experts are seeing this rare convergence of conditions as a signal, a moment where silver could break free from its current price limitations and surge to levels we haven't seen before. Imagine a scenario where inflation continues to rise, industrial demand from China and the green energy sector pushes higher, and supply remains limited. The result? A perfect storm that could catapult silver's value. For investors, this isn't just about catching a trend. It's about positioning in a market that has historically served as a hedge and a growth vehicle in times of economic uncertainty. If you're looking for an asset that could provide both security and upside, silver might just be that opportunity. Now, as always, make sure you consider your own financial strategy and consult with professionals. And remember, this isn't financial advice, but a look at the market forces at play. And if you want more insights like these, make sure to subscribe for future updates that break down the next big moves in the world of precious metals and beyond.
Citizen, it's probably incumbent on me to go beyond natural resources. Too often, what politics is about is asserting your interest against your neighbor's interest through the political process. So to the extent that the political process favored natural resources, and to the extent that I participated in that, I would rightly be regarded as a thief, which is something I would prefer not to be. I would just ask people to consider whether they are more interested in being protected by their government or protected from their government. I am sort of part of the latter camp. I suspect politically myself, I'm part of a very rare breed that subscribes to something called the non-aggression principle, which is to say that I don't believe that I have the right to negotiate using violence or the threat of violence. I can employ violence in the defense of my person and property, but I can't use violence to impose my will on others. And I would argue that the state, stripped to its essence, is an entity that reserves unto itself the right to violence, extortion, and fraud. I certainly understand that it was partly set up as a medium to, as an example, adjudicate disputes, but I would suggest that it's gone very, very, very much further, and frankly, in not very good ways. So I would just ask people whether or not they feel comfortable aggressing against their neighbors through government, and again, whether they would prefer to be protected by government or from government. I realize there's a spectrum of opinion, and I'm delighted to be part of several forums, this included, where disputes like this are usually conducted in polite fashion. So unlike other political forums that I've been reading for the last 2 months.